Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 20F from Cango Inc, but trust me, this isn't your grandpa's car company story. We're talking crypto and China, a potentially explosive mix, so buckle up. The headline, Cango is trying to reinvent itself. Once a major player in China's auto financing connecting car buyers with loans, they're now making a big bet on Bitcoin mining overseas. But is this a smart turn or a company lost on the road? Let's decode. First things first, this is their annual report for the year ending December 31, 2024. This report gives us a peek into how their business is doing and what risks they see on the horizon. You can find Cango's stock on the New York Stock Exchange under the ticker symbol CANG. Now let's dive into what's happening in their business. Worth noting, they are not considered a well-known seasoned issuer, basically meaning they're not seen as one of the biggest, most reliable companies out there. This adds a layer of risk to the investment. A crucial part of Cango's setup is their use of something called VIAs, or variable interest entities. In short, because of Chinese regulations, Cango, which is a Cayman Islands-based company, doesn't directly own the businesses that operate in China. Instead, they control these Chinese companies through a series of contracts. It's a common practice, but it adds complexity and risk because the Chinese government could change the rules and make this setup illegal. Let's get into some numbers. In 2024, Cango used $42.5 million more cash than it generated, which means it used more cash than it made from its operations. This is not a good sign, but the overall picture requires more analysis. Here's a big shift. The amount of financing transactions they facilitated went down from $389 million, converted from RMB here a few years ago, to basically zero now. They strategically scaled down automotive financing, which will lead to decreases in income over time. They have filed the required attestation for their internal control over financial reporting, meaning their financials are more reliable and consistent. Also worth noting, about $695 million is restricted, meaning it cannot be easily used. These restrictions affect the company's flexibility on how to use their money. Now to the big change, crypto. Cango started its crypto mining operation in late 2024, and as of December 31, 2024, their deployed hash rate was 32 EA, with 934 bitcoins mined in the fourth quarter of 2024. For comparison, one of the largest mining companies, Marathon Digital Holdings, had 24.7 in 2023. While this may sound exciting, the risks are definitely there. Total revenues decreased from roughly 233 million, 10 million in 2023 to $110 million in 2024, about half of what it was the previous year. Ouch. They have a risk management system, but it may not be able to assess or mitigate all risks, but also may not reflect a car buyer's actual creditworthiness, which may compromise overdue ratios. Here's a turnaround. In 2023, they had $140 million converted from RMB in cash from operations, but this year it went into negative, using about $42.5 million in cash. Let's talk risks. There's a long list, as there usually is. But let's dive into the big ones. Bitcoin prices are highly volatile and could affect profitability. Also, reliance on a third-party mining pool operator increases risks of mining failure, as they are reliant on accuracy of the mining pool operator's record keeping. There's also something called the Holding Foreign Companies Accountable Act, which could mean their stock gets kicked off the US exchange if the US regulators can't fully inspect their accounting firm. Basically a huge red flag. If that happens, trading will be difficult and the price of their stock could plummet. Moving on to China-specific problems, they mention relying on dealers and third-party sales agents to offer credit services to car buyers. Those agents may also refer prospective car buyers without regard to such individuals. Creditworthiness thereby hurting the company's bottom line. Also, the delisting of securities by US authorities might create more uncertainty for the company and in the securities market. They acknowledge that changes in China's legal system may subject them to uncertainties and that regulators may have a lot of power. The sales could also decline due to decrease in use and demand for cars, or failing to maintain and improve the experience of various platform participants, which may adversely affect our results of operations and business prospects. Fraudulent activities associated with car buyers could negatively impact the group's results of operations, brand, and reputation, and cause the use of the group's automotive services to decrease. Here's something concerning. The company states that they would have to pay $194 million of insurance, meaning they are taking on tremendous risks without any sort of protection. It seems there are substantial uncertainties with the laws in China, and they might be subjected to severe penalties or forced to relinquish their interests in those operations. Also, the group's risk management system may not be able to exhaustively assess or mitigate all risks, which can lead to outdated, incomplete, inaccurate, or fraudulent information. The company mentions that they did not include financial statements of the registrant that reflect the correction of an error. This shows reliability of data. The report lists a new CFO. Yongyang new leadership can often signal a shift in strategy. The registrant has filed all documents on the Securities Exchange Act of 1934. The company indicates that their management concluded that internal control over financial reporting was effective as of December 31, 2013, 1 TEO voided Framework 2024 based on Internal Control Integrated Framework 2000 Internal Control Integrated Framework 2013. And last but not least, the company has adopted an insider trading policy, which is designed to prevent people with access to private data from misusing it. Now, let's step back and really look at Cango. Cango is a company in transition. They're moving away from traditional businesses of pre-sales trading automobile solutions and moving into new emerging markets that are subject to volatile economic activity. The move is probably a long-term goal, and in the recent years it is likely that more challenges are to come. The most recent annual report does show positive figures from 2023 in net loss, however. Overall, there are significant risks with Cango at this time. The transition to crypto mining is a risky and speculative move. Plus, those VI issues are still hanging over their heads, always a risk factor that needs to be addressed, and they could get kicked off the NYs because of accounting inspections or because the trading price is low. It's not possible to accurately determine the business prospect and direction at the time. I'll continue to keep you posted. Thanks for watching. Be sure to like, comment, and subscribe for more corporate decoding.